So we are joined today by Jenny. Can you say your last name for me?
Uhlar.
I'm not good at that. So Jenny has been in financial services for 26 years. She's been with TIAA for 12 years. And I've been lucky enough to know you probably 2.5 years now since I moved to Michigan. So she helped me move my older son's 529 to MESP and then help open the 529 for my younger one. And she is a great resource for all things college planning and especially on the 529s and MESP. So we're excited to have her present for us, and I'm going to let her take it away. Like I said, if questions come up, I'll be watching the chat there and we'll get them to Jenny at the end.
Sounds good. Thanks, Alexa. Well, thank you for joining today. And we do realize as parents, you're very busy. So thank you for investing this time today to learn more about 529 programs. The topic today is 529s. We're going to really focus in on the Michigan Education Savings Program. This is the state of Michigan's 529 plan, and we'll talk more about that. So we'll go over what is a 529, talk a little bit about college costs, how you can save with an MESP, why would you consider using an MESP or 529, and how you can get started. So first, let's talk a little bit about what 529 plans are. These were created by the IRS back in the late 80s. Michigan actually was one of the key drivers to make this happen for families back in 1988. And 529s now are widespread. There are several plans offered by most states except Wyoming. Here in Michigan, there are 3 529 plans. So most states offer a 529 plan. Some have several. They are administered by a government agency like the Treasury. So State of Michigan Treasury Office manages the plan. They select a plan manager. So this is a financial company who runs the plan, oversees the investments, the website. So that plan manager is TIAA. And TIAA specializes really with colleges, retirement savings, and they also have a division that manages 529 programs. So there are 6 programs managed by TIAA right now, 6 different states. So they've been with Michigan the whole time since MESP was launched. That was in 2000. And we're going to talk a little bit about the types of 529 programs. So there are a lot of options, and among those options, there are different program types. So there are direct sold programs. This is MESP. These are offered directly from the state to you as the account owner. So when you use a plan like this, you will have very low fees. So that's usually attractive to parents because with the cost of college where it is, you really need every penny for those costs. There's another one called an advisor sold. There's one here in Michigan called Michigan 529 Advisor. So this is a little bit different. You may have a fee that you pay to your advisor to have this type of plan. There's another plan called prepaid tuition here in Michigan. So not every state offers prepaid. Just a handful of states have a prepaid option. Here in Michigan, it's called Michigan Education Trust. And this allows you to purchase tuition at today's tuition prices. So you can accumulate credit hours at the current price. So if you have a newborn baby and you purchase a credit hour for $500, how it works is the state will absorb all the future tuition increases, and they will pay that credit hour when your student is ready to attend college. So now that we've covered the different types of 529 plans, let's learn a little bit more about how they work. So 529 plan gives you quite a bit of flexibility if you have multiple children you are able to move funds between those children at there's no cost, and it's not a taxable event. So you can move funds between siblings of that original beneficiary. So really any family member of the original beneficiary, you can move funds to. So that is helpful for families who say, they may ask, what if I oversave for one of my children? What do I do with that extra money? Well, you could move it to another child who needs the funds, or back to you as the parent or another family member, or even future grandchildren. So you have a lot of options there that would keep the tax deferral growing. So these plans we're going to talk about more, they grow tax-free. You can also use a 529 all over the country. So if you set up a Michigan Education Savings Program, you're not restricted to schools within Michigan. You can use your funds at any accredited institution and quite a broad array of institutions, public and private colleges, community colleges, trade schools, vocational schools. There are even apprenticeship programs who accept 529s. So you have a really broad array of types of education your child can choose from with your funds. And next, parents always want to know, how can I use the money? What are the expenses that are considered eligible? So there's a wide range. You can use this for tuition, room and board. That could be in a dorm. It could be off campus. If your child is renting a house or an apartment, you can use this money for textbooks, fees attached to the course your child is enrolled in. So these will be considered tax-free withdrawals. There is one criteria: your student needs to be enrolled at least as a half-time student for these distributions to be tax-free. So that would mean 6 credit hours at least they must be enrolled in. And a lot of people will ask, I'm a grandparent, can I open up an MESP for my grandchild? And the answer is anyone can set up an MESP for any individual. So you may have several kids that have several MESP accounts. They may have one owned by a grandparent, one owned by an aunt or uncle, one owned by their parent, and that's fine. They can have multiple accounts. So anyone can add money for even a friend, niece, nephew. There really aren't any restrictions. If you live in Michigan, you can take a deduction. So for Michigan residents, you can deduct up to $5,000 if you file single every year. So if you contribute $5,000 into an MESP, you can take that as a deduction right off your total income. If you're a joint and you contribute $10,000, you can deduct $10,000. So joint filers, $10,000 max per calendar year, single filers, $5,000. Now, another nice thing about a 529, if you select the account type that's called individual, you'll maintain control of this account, even if your child is over 18. So you'll get a couple options when you open up an MESP. One is individual. That's where you maintain control, even when the child's over 18. The other option you'll get is uniform gift to minors. That is an irrevocable gift to your child. So usually people don't take that option unless there's a really specific reason you want to make an irrevocable gift, because that type of account, when your child's 18, you'll receive a letter that requests you must open a new account for your student in their name as owner. So they will maintain control when they reach 18. So we always recommend choose individual unless there's a specific reason you need to gift that money to your child. So another question that comes up: what if I have money left over and nobody needs it? What am I going to do? Can I take it out? Is it gone? Have I lost the money? So the answer is you can always take funds out for a non-qualified purpose. So if you needed money, for example, to buy your student transportation, they need a car. Well, transportation is not a qualified expense, but you could take funds out. You just have, you're going to have a portion of that withdrawal will be your contribution. That's not taxable or penalized. Then another portion of that withdrawal will be your earnings. The earnings would be subject to regular federal and state tax and a 10% penalty. So there are some waivers. If your student had a scholarship in the same amount of that withdrawal, the 10% penalty is waived. If they are attending a military academy, the penalty is waived. And if they had passed away or they were disabled, penalties waived. So, you know, you get a lot of flexibility with a 529 plan. So we like to really encourage families to save early. Time is really your biggest advocate here. So you have a limited amount of time to save for college, 18 years. And as any of you who are parents know, it goes really quickly. So if you start saving early, that is going to really work in your favor because you have that time to let things grow and compound. So if you were to start saving $50 a month for a newborn baby and you earn 6% every year on average, you'd have over $19,000 when your student attended college. But if you procrastinated and you waited until your child was 10 to start saving, then you've only got a little over $6,000. So starting early is very important. We wouldn't discourage you from saving if you've got a middle schooler or high schooler. It's always good to save, no matter when. But if you are at that point where you have a younger child, saving early can really help you. So 529 plans, really the attractive feature of 529s is money will go in after tax. Once the money's in this account, all the future earnings are tax-free. So as long as you withdraw for those qualified expenses we mentioned, all of the earnings you accumulated will come out tax-free. So you won't owe taxes again on this money if it's used for college. So when you look at other types of vehicles, think about savings accounts. Actually, quite a few parents use savings accounts for their education fund. And there are some disadvantages with that because number one, there aren't any tax advantages. So you'll pay taxes on any interest you earn. Number two, there's no state of Michigan income tax deduction. And three, you don't have a variety of investment options there. It's just whatever the interest rate is. So putting funds into a 529 really can help accelerate your potential earnings. So now let's talk a little bit about college costs. College right now, if you were to take a look at University of Michigan, their current cost is $31,000 for 1 year if you were to live on campus. So that would be including tuition and room and board. So college has gone up more than most categories in the economy, and it's gone up quite a bit more than income. So it's something to keep your eye on. If saving for college is a very important financial goal, you want to have a good plan and you want to be aware of what schools cost. So you can always Google cost for any school, cost of attendance, just put in the name of the school and cost of attendance. We also have a calculator on the MESP website. It's under the plan tab. It's called the College Planning Calculator. And we have all of the schools, really any school in the country is there. You can pull it up and take a look at the cost. So higher education is definitely more than it may have been a couple decades ago. Student loans are moving up. The average student loan is now over $37,000. So think about that in terms of, you know, your child graduates with a student loan of over $37,000, but you know, they could use that money to buy a house. They could use it to start a business or buy a car. So carrying that debt with that almost $400 a month in payments can hurt their other opportunities. They may have to delay other other things like getting married or buying a home because they're carrying that debt. So anything you can save ahead of time will definitely help reduce the amount of debt and hopefully reduce any parent loans you have to take on or eliminate that. So college right now, here's a peek at the average cost for Michigan. So public and state, a lot of schools still are around 24,000. They're definitely creeping up. It seems to be they're all kind of creeping up to that 31,000 mark to keep up with the U of M. And private schools on average are about 39,000. And then another interesting fact is it takes students on average almost 20 years to pay off a loan. So that would put your child in their late 30s. So a little more, and parent loans on average have a balance of over $35,000. So parents really feel, the parents we hear from, they're still feeling that college is a great investment. We are hearing more about the trades. I think interest in the trades, especially in Michigan, has increased. And the good news is if your child chooses a trade school or apprenticeship program, they can use their MESP for that. If they choose a public or private school, they can use money for really anything, public, private, trade school. So you've got a lot of options, and families really feel that their students need that education to give them a better lifetime earnings. So a college graduate will earn on average $1 million more over their working lifetime than someone with a high school diploma. And, there are more opportunities, more better quality of life for your child, where they can have healthcare benefits. So, there are great options with higher education, and it's still really valued by parents. So how does MESP work? If you're, really looking to start saving, how would you go about getting started? So you would go to misaves.com is our website. Something to note about MESP is the internal costs are extremely low. So with MESP, internally, there are 22 different funds you can choose from. The internal cost ranges from 0% to 0.185. So if you had, $1,000 in MESP for the entire year, the most you would pay in cost is $1.85. So that attracts a lot of people. We actually have, I think about 25% of our account owners are from out of state. So the plan attracts quite a few people from all over the country. People who don't have a tax deduction offered in their state tend to gravitate to MESP. The plan, we just actually got our Morningstar rating. So Morningstar is an organization who rates all of the largest 529 programs every October. They go through a deep dive into each plan, and they come out with a rating, and they're really respected by the financial industry for their detailed analysis. And the last 3 years, 2 years prior, we were rated gold, and we just found out we were rated gold again. So they only have 2 plans on that top threshold of gold plans. So it's really, really great, especially for those of us here in Michigan, that we have such an outstanding 529 plan to consider. So if you're ready to start, you can open an account with as little as $25. There are no other fees, no application fee or transfer fee, maintenance fees, commissions, and you can set up monthly contributions. You can do that through your checking or savings, through your bank, so bank account, through payroll. If your employer allows you to set up a direct deposit, you can set up payroll direct deposit. That's a really great way to save because it just happens automatically, and people tend to save more. Savers who are saving through payroll typically save about 75% more than those who are saving through their checking. So you have a selection of funds. You can choose from 22 different options. A lot of folks choose the enrollment year. This is just a mix of 9 underlying funds. So it's got stocks, bonds, and it's also got a guaranteed interest-bearing account called principal plus interest option. And that's popular if you really like to choose your own funds. You've got quite a few to choose from. You can kind of mix and match. So these are standalone index funds. This first fund is managed by TIAA, and the next 4 are managed by Vanguard. And then you also have these pre-mixed funds, but they just are static. So enrollment year is going to gradually change as your student approaches college. So if you have a newborn, they're going to be more like 80% focused on equity funds or stock funds, 20% in fixed income. Where if you have a student ready to enroll in college, they're going to be down to 15% in stocks or equity funds. The rest will be in the interest-bearing account and fixed income. So that's one where it's kind of like the target date retirement fund, where it just slowly will change according to when the student enrolls. So that is an option. Multi-funds are an option, but they're static. They don't automatically adjust. And last, there's this guaranteed interest option. And this is a rate is announced every January. So this year it paid 1.1. It may go up next year with interest rates going up. It can pay anywhere from 1 to 3%. So sometimes parents will use that as a parking spot if, you know, their child is enrolled, or maybe they're a senior, junior, and they just want things, you know, just safe in an interest-bearing account. That's an option you can use.
And how often can people change the investment selection? Are there limits?
That's a really good question. So with all 529 plans, you have 2 rebalances per calendar year. So you can change your new contributions anytime, but for the existing money in the account, twice per year. So another feature people really like with MESP is there's a UGift code. So when you set up an account, it's going to ask, would you like to create a UGift code for your student? And if you do, this is a code you can share with family, and it gives them a way to just make a contribution online. So it's a nice feature. You can track any gifts you receive on when you log into the MESP website. If they live in Michigan, they can take a deduction. Now, one thing I should mention, this, I don't think we've ever really come across anyone who reached this maximum amount, but with all Michigan 529s combined, so if a student has the MET, MESP combined, you can't have over $500,000 contributed. So once $500,000 is contributed, interest can accumulate, but no new money can be added. So it's pretty high. We don't really come across many people who run into that.
I will say the UGift code is super nice. And I mean, my kids are younger, but for grandma and grandpa, for birthdays and the holidays, I text it to them and say, maybe a small present, but they will appreciate it when they're 18 that you spent the money on this rather than the Lego set. So it's very easy for them to do that.
That's great. Yeah, I've heard of people who put the code out at kid birthday parties or like, you know, even baby showers. Baby showers, you wouldn't have the child social yet, but the parents could just set up an account in their name as owner and beneficiary, and then change it to the baby's name later. So baby showers, high school graduation parties, you know, it's definitely something I think people appreciate if, you know, they want another option than a toy.
Mm-hmm.
So that's good that you're using it, Alexa.
We don't need more stuff. So that's
right. Kids accumulate a lot of stuff. So, and then there's an app. So this is, and if you have an account, I'd encourage you to set up the app. It gives you some nice little tidbits. So what I'm logged into my app right now, and what pops up is how do you compare to other savers? So it'll give you what all the average of what most savers are contributing. So the modest savers contribute 600 per year. Average saver, most savers 1,500 per year. The top 25% are saving 3,700 per year, and the top 10%, 7,300 a year. So that's interesting. And a lot of people will ask, well, what should I contribute? What are other people doing? Is 100 a month going to be enough, or should I save more? And that's really a personal decision. It's something, we could always walk you through our calculator on the website, and I'm sure Alexa and her team can also do that. And I think really it's important to figure out what is your goal, what do you want to accomplish, because the time is limited, it will go quickly. So if you feel, I really, really feel that I want to have, 60% of the cost of college ready for my child, you can definitely make that happen. And we have tools for you to use to monitor your progress. But everyone's different. A lot of parents are dealing with high daycare costs, so they might not be able to put in really what they want to until the students are enrolled in elementary school. So people have different strategies, but it is important to really consider what do you want to accomplish so you can get there. I think there's a little bit of a people just kind of put it off because they feel, or there's an illusion there is a lot of time, and really it goes very, very quickly. So time is important to take advantage of and maybe leverage it to your advantage. So the Michigan income tax deduction we talked about, tax-free earnings we talked about. The Michigan income tax deduction, something to note is this is self-reported. You really don't get any kind of reminder from the state to say, hey, make sure you take your tax deduction. You just have to report that when you do your taxes, or if you work with a tax professional, what you can do is just log into your MESP and you'll see total contributions made in 2022. Take a screenshot or print that and give that to your tax person. But make sure they account for that. It's something that you have to remember to report it. And gold, this is a little more about that gold star rating. So now we have 3 years of gold ratings, which I think is really, really cool and, great for us here in Michigan, especially. One other concern, some parents may delay saving because they may worry, well, what if I save for college? Is that going to hurt my students' eligibility for financial aid? And how schools look at 529s is very low impact. They will, they'll actually consider a UGMA account at 20% when they're looking at the aid package. So how they look at these different assets is they'll reduce the amount of aid available by 20% of a UGMA account. So if you had $100,000 in a uniform gift to minors brokerage account, the school's going to say, all right, well, we need you to chip in $20,000 to the cost of college. So if the cost of college was $30,000, they're going to have you put in 20. So it leaves 10,000 for financial aid eligibility. So that's a little bigger impact than a 529. With a 529, in the same scenario, if you had $100,000 saved in a 529, the school will ask you to chip in $5,640. So if you take that from the $30,000 for the cost, you would have, around $25,000 still a need to cover. So that's where financial aid could kick in if you qualify. So it really doesn't impact the student's aid eligibility too much. It's very low percentage.
That was really interesting. I know you watched part of the webinar Melissa Joy did about how to pay for college. And if you haven't watched it, I would check it out because it does go into what affects it. I've read about it before, but to hear it again, and I think it is something like, oh, well, if I save this money, then they're going to get less when it comes to college. And Anne really talked in some good detail about what does affect it and how you can make it lower. And it was a good listen for that piece of the puzzle, because it is a a giant puzzle on how do we get them to college and at a cost-effective way. So it's
Yeah, definitely good to pick up that book or watch the webinar to learn more. And yeah, this is definitely a question that comes up a lot. Another resource, the state of Michigan has they have a financial aid office, and they actually have some live webinars going on in November. And they talk a little bit about FAFSA. They talk about the scholarships available, how your student can search for those. So it's another resource you could look into, especially if your child is in high school. So gifting. So another interesting piece of 529s is you can accelerate a gift. So typically the IRS, they're going to limit how much you can give to any individual. So this year, the max is $16,000 per person. If you are a single person, you can give multiple people $16,000. If you are joint, you file your taxes joint, that goes up to $32,000. You can do something called a forward gift with a 529. So if you want to accelerate that 32,000 or 16, you multiply it by 5, and you're allowed to forward gift. So that's happened on occasion. We've had grandparents who've done a 5-year forward gift, and something you'd want to talk to your tax person about, but it is an option with 529 plans. So if you're in a position where you want to make this accelerated gift to get the account started and growing, or maybe you're trying to lower your taxable estate, this is a tool some people use. And with a 529 plan, you can move this. So if you are, like Alexa, if you live in maybe you're moving from Michigan to another state, and the state you move to has a nice tax deduction for 529s, you want to take a look at that. You always want to first take a look at your home state. Where do you live? What does that state offer you in terms of a deduction? And if it's an attractive deduction, you can move your MESP. So you can roll it over once every 12 months. You're allowed to roll over between 529 plans. So if you move, take a look at what's offered. Some states have deductions. Quite a few don't, like North Carolina, Texas, Florida, they don't have deductions offered, but other states do. So you can always check and see what makes the most sense for you. You might choose to keep your MESP going, or you might choose to roll it over. So just, I think 1 or 2 slides here, and we'll wrap it up. Definitely take a look at the website. It's misaves.com, and you can check out that college planning calculator. It's under the plan tab, and that's going to be a really good tool to help you fine tune your goal, what you want to accomplish. And you can build your investment options on your own. You can pick and choose, or you can choose enrollment year. You could mix and match though. If you like enrollment year, but you want a few other funds, that's another option. And remember, you can change those underlying holdings twice a year. You will be asked if you'd like to set up a monthly ongoing contribution. Most people do set that up. You can make that happen through your payroll or your bank. And then you can download the app to check in on your account, or you can check in on the website and monitor your account. So here's the site. We have, there are 2 of us here in Michigan who are a resource for you. So if you want to set up a meeting and just go over some questions before you get started, you can go to misaves.com/appointments. And I know Alexa and her team work with families to discuss 529. So that's another option. And then we have an 800 number that's available 8 a.m. to 8 p.m. For any service questions you have. So I think that wraps it up. We have a little about payroll. We'll skip that now. If you do have an employer who offers direct deposit and you want to walk through that before you set it up, I can help you with the steps.
Good. I was just going to mention, I know a lot of our clients already have the MESP account set up, and we talked probably a month ago that MESP now allows us as the advisor to be able to view the 529. So we're not acting as the advisor on them, but we're able to see what the balance is. When we do our annual meetings, we like the updated numbers, but this way it's a form that, you know, we have the account number, and it allows us to see what contributions have been made, what you're invested in, and what the balance is. So we can get that form out to you if you want to add that on. No cost or anything, but it just makes it easier for us to integrate that into the financial planning that we do on our side.
Mm-hmm. Yep. So that's really great. And, you know, I think it's really good that you've embraced this. And, you know, we've worked with a lot of your customers or clients, and it's really been great partnering with you. So thank you so much for that and getting the word out. But just to recap, you know, why would you use a 529 plan? Well, tax-free growth, very flexible contribution levels. It's really simple. You don't have to, you know, worry about an investment selection. And I'm sure you can even check with Alexa and her team if you're unsure of which investment to choose. Investment costs are extremely low. You've got a lot of flexibility there, and financial aid shouldn't be impacted negatively when you use a 529. So a lot of good reasons to get started. And if you're ready, you can go to the website and get started. You're just going to go to misaves.com and go up to that open an account green button on the top right. You can always set up a meeting with myself or my colleague, Mary, if you need a little help. And let's go to, we've got a couple slides for you, Alexa.
Yeah, I just was gonna put our social media handles on there. We'll share the webinar once it's available to us, but we also have a lot of content. The webinar Melissa did about how to pay for college, a lot of blog posts about college planning, and also some podcast episodes. And then next Thursday, we have our year-end planning webinar and market update. So that will be an interesting one. I know there's 8 weeks, I think, until the end of the year. So the time is going fast, and we're here to help with all parts of the financial picture, college being one of them. So follow us, and then there's our contact information. And then we want to make sure to put our disclosure on there, so we can't forget that one. There's the disclosure that we have to use. And I didn't see any questions come through, but like I said in the beginning, we're both available to help with any questions that come up, email, phone call, or however you want to get in touch. We're here for those. And thank you for presenting for us. It's a great tool for those that want to save for college, and we're glad to have you help us out with that.
Yes, thank you so much. And please reach out if you need any help. We are here for you.
Great. Well, everyone, have a wonderful afternoon.
Thank you, everyone.